Everyone has to explain.
You ready?
Yes.
Start.
Good evening. We, Team Fornax, thank you for attending our presentation regarding the investment analysis of Welspun India. We are here today to answer the most pertinent question you have as an investor. Is this stock worth your hard-earned money or not? To answer this, we analyze this stock on the basis of two aspects. Firstly, is this stock a classic case of a zebra in the lion country? Is Welspun India moving away from the herd and trying to enter into new territories through strategy and innovation? Secondly, is this stock creating value for the investors? Welspun India is a market leader in the home textile segment and is driven by a strong management team led by Dipali Goenka, DK Goenka and Rajesh Mandaviwala. We believe that Welspun India will be a star performer based on our checklist value, and we give it an outperformer rating with an upside potential of 30.74%. Welspun India began its journey way back in 1985. It derives 80% of its revenues from US and the European Union, where the consumer confidence index and one-home sales are on an upswing, thus giving a boost to the company's performance. Also, the consumer discretionary spending theme is all set to play out in the emerging economies like India, thus giving a further thrust to the company's performance. The regulatory regime in India, where Welspun has its production facility, is all set to support the textile players with intra-subsidy schemes like TUFS and Gujarat State Textile Policy. Producing in India also allows Welspun India to reap the benefits of adequate supply of raw material, low cost of labor, low manufacturing cost, and stable political conditions. Another economic moat that Welspun has used to differentiate itself from its competitors has been brand power. Welspun has been buying and licensing various brands like Christie, Kingsley all over the world, and also associating with prestigious events like Wimbledon Championship, Rugby World Cup, and most recently the Australian Open. It has long-term contracts with 14 of the top 30 retail giants of the world like Walmart and Tesco. All these facts highlight the long-term sustainability of the company, its vitality.
Welspun has always been agile and proactive in looking for opportunities and going ahead of others in seizing them. One such opportunity was the potential in the B2C segment. And to mark its entry in this segment, Welspun is using innovations such as Hydrocotton and Neosoft along with brand power to make a mark in this segment. In 2015, the company realized 31% of its revenues from innovative products, and this figure is set to rise further given that 6 of its patents are still pending approval. As a part of its long-term strategy, Welspun is continuously trying to move away and reduce its dependency on the US markets. Therefore, it is looking at the demand in the emerging markets of Latin America and Asia. In India, it is increasing its presence to the Spaces brand, while in China, it has already established the Christie brand. To conquer the cyclicality in this sector, Welspun India has been trying to tap channels wherein the demand is more perennial. Therefore, it is moving into sectors where the potential $1 billion hospitality sector, where the replacement demand is huge. Last year, it went digital through its online shopping portal shopwelspun.in and has gained significant market share in the last 5 months itself. It also believes in having a dynamic market product portfolio which is based on the market demand, and thus it added products like bathrobe, rugs and carpet recently last year to its portfolio. Not only on the distribution front, but across the value chain, Welspun has been creating value for its stakeholders. Around 70% of its spinning and weaving facilities have been integrated backwards. It also has a massive expansion plan of 1200 crore rupees for capacity expansion next year. By 2018, the company aims to move towards a long-term sustainable ancillarization model which is usually seen in the auto companies, and this would be across spinning and weaving facilities.
We have now come to the most important part of our analysis, the financial strength of Welspun India. It is highly leveraged, yet it has strong fundamental. Its top line is set to grow at around 16.88% CAGR in the coming year. Also, the cost of raw material as a percentage of sales is also decreasing. Consequently, the profitability is also on the rise. EBITDA margins have increased over the last 5 years, so are the net profit and operating margins. Company is also keeping adequate cash in hand to finance its working capital needs. Payable days are increasing, whereas the receivable days are decreasing. This, coupled with a faster inventory cycle, has decreased the cash conversion cycle, thereby increasing the liquidity. The company is also maintaining a decent CFO to capex ratio over the years. It is also keeping its debt under tight leash, which is evident from its decreasing debt to equity ratio. Its high interest coverage ratio is also a good indicator of its high EBIT growth over the years. When we performed a 3-step viewpoint analysis, we see that its ROE is set to increase and reach around 36% in the next 5 years. Also, the return on capital employed is rising, which shows us that its company's capital is generating good return. So when all these factors are put together, it shows us that Welspun India Limited has robust financial and for its industry is a company to reckon with. Moreover, the competitor landscape shows us that Welspun India has outperformed its competitor in terms of EBITDA and profit margins, also in earning per share and dividend yield, whereas it is very well placed in terms of ROE, ROCE, price to earning and price to cash flow.
Valuation is partly an art and partly science. We have used the discounted free cash flow method to value Welspun. To estimate the free cash flows, we have used a two-stage growth model. The intrinsic value as per the DCF method comes to rupees 1083. We have also used relative valuation to value Welspun. The competitors are chosen based on the nature and size of business. The dynamics of the Chinese textile market are quite similar to the Indian textile market and are competitors to each other in terms of exports to the US and Europe. So, two Chinese companies were also chosen for relative valuation. Using trailing median as the basis, we performed pricing of multiples with respect to EV/EBITDA and PE. The intrinsic value as per EV/EBITDA comes to rupees 1040, while with that of PE comes to rupees 1117. Assigning a 60% weightage to DCF, 25% to EV/EBITDA and 15% to PE, we get an intrinsic value of rupees 1077. We have also performed Monte Carlo simulation based on the historical prices of Welspun of the last 7 years, and it is observed that the concentrated area lies in the range of rupees 757 to rupees 1220, which is the same range wherein our intrinsic value lies. The probability of returns of more than 25% comes to 0.43. The PE pan chart was calculated from the historical patterns of the PE ratio, and it is observed that the Welspun's price range was well within the lower and the upper band for most of the time in the previous 2 years. Welspun's PEG ratio of 0.59 is calculated by forecasting the EPS growth. A PEG ratio of less than 1 indicates that the PE of Welspun is not high when compared to its growth prospects. Welspun India Limited has transformed itself into a company which practices the best corporate governance practices. It has an effective CSR policy in place enshrined with 3 E's of empowerment, education and environmental management. Both these factors are helping the company build a responsible and sustainable business and are differentiating elements in its success story.
We have also performed a credit assessment of the company based on 4 parameters: profitability and return, market position and trends, leverage and liquidity, and cash flow and debt service. On the basis of individual scores assigned to each of these factors, we have come to a cumulative rating of A for the company as a whole. The analysis will not be complete until we talk about the risk involved in the stock. On the regulatory front, the free trade agreement entered into by the European Union and other competing countries poses a significant risk to Welspun's growth. India has a cost advantage in terms of raw materials and labor cost. Welspun can leverage this advantage against the import duty inequalities. Raw materials form 50% of Welspun's manufacturing costs. Any change in the supply can significantly alter its revenues and costs, even though it is due to deficient rainfall or any other factor. An increase in the price of raw materials by 20% will change the recommendation from buy to sell. 95% of Welspun's revenues come through its exports. It therefore has a significant foreign currency risk. To hedge the risk, it uses forward contracts and swaps to hedge 70% of this exposure. So we can see that the management has effective policies in place to combat these risks.
Thus, we see that Welspun stands out on all the 4 parameters, that is vitality, agility, leverage yet strong, undervalued, execution with empowerment. And thus, ladies and gentlemen, we reiterate a strong buy call on this stock with an upside potential of 30.74%. Thank you for being a patient audience. We are now open for questions.